So first of all, very good morning. Those who are watching this video on YouTube, very good morning, evening, afternoon, whatever it is to you all too. Thank you for sparing the time on a beautiful Saturday morning for your learning and for your growth. I welcome you all to this webinar. Many interesting things are coming your way. Those who can hear me clearly, there's a button to raise your hands. You can raise your hands and show me. And those who in the middle want to ask any question, there's a chat box. You can go to that chat box and ask questions. Feel free. If I'm in the middle of saying something, I will not be able to answer, but eventually I'll take up each and every question. Okay. Thank you. I'm well. Thank you so much, guys. Thank you for the gestures. Very good morning to all of you. I'm seeing a lot of messages, good morning messages. And thank you for the new faces. How many of you are attending a webinar with me for the first time? Raise your hands. For the first time, how many of you are attending a webinar with me? Great. Very nice. So I see some many new faces, as well as I see the fact that my old students, my current students, all of them are there also. This goes to show how much dedication they have for learning. So thank you for coming, all of you, and making my entire progress about this learning to the public more fruitful, because it is highly important that when you come to the markets, people are talking about trading, people are talking about becoming a billionaire overnight, etc. But I'll tell you, there is a way you can make it. You can make it big, but that way is not how people discuss amongst themselves. Now, I'm a chartered market technician, cleared all three exams of chartered market technician. I've done 2 levels of CFA, been a guest lecturer in some top colleges in India, and have been training people for the last 3 years. I've been trading for the last 9 years. I've worked with more than 100 successful traders. I've worked with them, and I have taught many students, more students than that. And believe me, in my journey, I've seen many turnaround stories. People who call me, come to me, sometimes with also a lot of problems. Also, have seen that there has been a significant improvement and turnaround in their lives and destiny with markets. Now, how many of you here want financial freedom? Raise your hands. How many of you here want financial freedom, complete financial freedom, that no matter where you go, where you are, you never have to think about how much to spend or look on the right side of the menu, etc. Want complete financial freedom? How many of you think markets is a way to achieve it? Raise your hands. A way to achieve complete financial freedom. How many think? Right? All of you think that? Right? Great. Awesome. Believe me, yes, you're right. There is a complete financial freedom existing out there for all of you, and you have to go and grab out there what you think you deserve. The problem is most people don't think they deserve enough money. And when it's lying around right there in front of you on the screen, and the glimmering millions and billions of dollars and rupees are there shining in front of you, if you don't have the skill, prowess, and belief system to go and take it up, then there's a problem with you, not with the markets. Now, most people talking about the markets also always talk about ye loss ho gaya, ye stop loss cut gaya, etc. That is not the way to approach markets. I'm sorry. A lot of people talk about these things, that markets are a way to burn your fingers. Markets are not the best way to make money. वहाँ पे loss ही होता है, trading में हमेशा loss ही होता है. I can suggest you one thing, one of the important things, without, even if you are leaving the webinar right now, one of the most important things you can take from me is that don't talk to people who talk negatively about the markets. Negativity will only attract negative situations and negativity further. Positivity will attract positivity. You have to understand that and get it right. Those who talk positively about markets and trading will only enhance you. those who talk negatively about markets and trading, you will only spread more and more misery and nothing more. Now, when it comes to technical analysis, when it comes to technical trading, there is a way to make a lot of money. Out there, there is huge amount of money, far more than each one of us needs out there in the market. There is so much money you can make which you don't even know where to spend. And your job is not to come here and sit and toil. You are not in this world to sit and toil. Work 24/7 and get the ultimate salary and work for someone else. That is not what we are here for. We are here to rule our lives, live our lives to the fullest. We are here to enjoy everything which is there in the existence and enjoy it wholeheartedly without thinking about misery. The problem is most people don't think they deserve. How many of you really are thinking right now and questioning yourself and feel that at some level you deserve to be rich? How many of you feel that? Raise your hands. How many of you really feel you deserve to be wealthy? There's a difference between being rich and wealthy. I know a lot of rich people, but I know that they are not wealthy people. I know a lot of rich people. You see them everywhere. You see them. You go to any place, you will see them. But what about being wealthy is that you know the art of making money. The art of making money. And that is what I'm here to give you a glimpse of. The art of making money. At the end of this webinar, you will be able to learn a few things which you'll be able to understand. And if after that, by any chance, I'm not saying anything, I do these free webinars for free. And I only suggest those who have joined me earlier, look at them. Look at the success stories. There have been massive success stories. And after that, you make a choice if you want to join me in the future also. I'll be more than welcoming you. On that note, let's start our today's session on technical trading. This is Mohak Pachesia, and we start right now. So guys, let's understand what technical trading is about. Okay. Technical trading, which most people think, most people think this is me. Most people think this is me, right? Now, most people think this is me because they themselves find it a very big deal to predict the markets. They find it a very big deal to predict the markets because they're only looking at stories. People who think, a fundamental analyst or a story which is there online or a link which is sent or article you read on weekend will give you anything about the markets. Fundamentals is for long term. Fundamentals does not make you predict the market. The technicals make you predict the market with a value. And if people who think that somebody who is a technical trader like me can predict the future, yes, I can, but not all the time. But I can do it consistently. I can do it out of 10 times. I can do it 7, 8, 9 times. Or sometimes 10 or 10 times. There will be stop losses if you're in a market environment. It is a place of uncertainty. You keep your dreams in your, keep your dreams, have your head in the cloud, but you have to be real. And those people who are real, they progress. Those people who think they're too smart, they lose. Because they find they have got successful in their job, they have got successful in their studies, careers, they have got all the PhD of the world. I've seen them make the worst of traders sometimes. And those who are proud of what they have done in the past and don't look at the markets humbly, those people are not in touch with the practical reality. And those people lose money first. They think that they themselves can be having some crystal ball because everything is so easy and you can just do things in a Google search away or a YouTube search away. So what I'm trying to tell you is that I'm not an astrologer. I do have a hobby for astrology, but that is different. I'm not having a crystal ball. I'm not having a crystal ball. I cannot predict the future, but I can predict it most of the times through my concepts and technical analysis and variables. Right? So who is a technical trader? What exactly a technical trader is about? Who is a technical trader? What do you think? A technical trader is someone who has a setup on the basis of technical analysis. We'll explore more on that. Uses his money management discipline and uses his trading psychology skills. Now, most people over here must not have heard of this term trading psychology and what skills of trading psychology you need. And that is, I tell you, the primary reason why you're not making money. The secondary reason after that is that most people have some knowledge. Most people have some knowledge. They get in with some knowledge. And believe me, 90% of the people who talk to me, so many people in a week, more than 20 people in a week call me up. New faces with their problems. And I'm always welcome to interaction. Because my really heart goes to you, because at one point even I was not knowing anything about the markets. So if 20 people, new faces, actually call me up during the week, and I cannot tell you how many just sign up to the blogs and Telegram, etc. And you see 52 weeks in a year. I tell you that 90% of the people who come to me first have made money in the markets, then they have lost money. They first made money because they were careful. They wanted to, plow their hard-earned money in a proper way. And then they got overconfident. And they thought that having half knowledge works all the time. Half knowledge does not work. Complete knowledge works. Half knowledge is in fact more dangerous than no knowledge at all. So if you have got your technical setup right, it's a very important part from the practical point of view. And most people whom I know of flying around lots of screenshots on WhatsApp and this and that, so many WhatsApp groups, and I'm telling you, I'm not saying all are wrong, okay, but I do feel that 70 to 80% of them technically don't mean anything. Why, you will get to know very soon. Trading psychology is very important. Now, of course, how many of you really have learned something or have ever done a course on technical analysis, have learned from someone else? Raise your hands. Very few people. Very few people. And you know what? What tends to happen? I've seen this. What tends to happen is that if I go and tell you that you will become a billionaire overnight, then you will come and learn from me. But that is not the reality. People want things too fast. Everybody wants things too fast, and the best things in life take some time to come. I'm not trying to say that you have to connect time with money. I never believe in the correlation of connecting time with money. I always believe I can make humongous and vast sums of money very, very suddenly and very, very quickly. I always believe that, and market offers me that. And I take that what market offers because I believe that. You have to have a belief system, you have to have a correct psychology, and you have to have a correct mentoring, correct learning in order for you to trade properly. Markets are moving up and down. Any class 5 student can go and trade and make money out of one trade. It's no big deal. Either it'll always be a 50-50 probability of either going up or going down. But what is far more important is to get streamlined in your purposes in a very, very clear manner, which I see a lot of people are failing. Lastly, another very important point, and each of these important points are equally important. There's no that this is the best and this is the least, etc. No, each one of them is equally important, which is money management discipline. If you have money management discipline and psychology and a technical setup, nothing in the world can stop you from making money consistently in the markets. What does money management mean? A plan, a rule that you follow across a series of trades, and most of the time you're right. What is money management? A rule, a plan. How many of you have got profits in your trade many times and never take the profits and those profits vanish? Raise your hands. You took a trade, it went into profits, and then the profits vanished. Okay, quite a few hands are raised. I know much more than that happens. Why I'm saying is because you did not have a plan for proper money management according to the technical setup with the right psychology. If you did not have the right plan of money management according to what the technical setup in question is, in the right mind space, It is like basically a stool with 3 legs, and this stool with 3 legs is what keeps the stool, away from falling down. If you sit on a stool which has only 2 legs, you're most likely going to fall down. Out of these three, you want all the 3 legs. So that is how you have to think, and you have to focus on each one of these to get your things right. And those who are new, those who are finding it difficult, I'm there to help you. First, let's clear every misconception you may be holding. What is technical analysis? What is fundamental analysis? बहुत लोगों को इन दोनों के बीच में अंतर ही नहीं पता. Fundamental analysis क्या होता है? Technical analysis क्या होता है? So let's understand this from an example point of view. आप एक मॉल में जाते हो, मॉल में बहुत सुंदर शाम का वक्त है और आप एक बेंच में बैठ गए, बाहर बेंच है, पेड़ पौधे हैं और आप बेंच पे बैठ गए और बाहर से आप देख रहे हो इतने सारे शोरूम्स हैं. So many showrooms are there in that mall. Now you have 5,000 rupees in your pocket. You go there and you say, I have to buy this quality jeans. I have to pull up, this is the jeans, this is the quality, this is the style, this is the brand, this is the material. And you go to all these shops to go and find the jeans which is best, which is the most value for money. You go to each shop, you go see the manufacturer, you go see which the company is, what the brand is. Then you wear it and ask your friend, how is it looking? And then ultimately you buy the jeans. That is fundamental analysis. Now I'm sitting on a bench and I'm looking at all the shops, all of them selling jeans of different brands. I simply go to the shop where the highest number of people are having their footfall. I go to the shop which is in the highest demand. I go to the shop which is in the highest demand because if I buy jeans right now from there, 2 months later the price will be higher. Or sometimes 2 days later the price will be higher. Or in case of markets, even 2 minutes and 2 hours later, price can be higher. So that is what technical analysis is about. Like for example, other things. Let's take, some people see the news, monsoon aaya, monsoon ka acha hai numbers, and if the monsoon is very good this time, Nifty should be going up tomorrow. Can fundamental analysis tell you Nifty should be 50 points up or 20 points up or 70 points up tomorrow? No. It can be down also. But technical analysis helps you. See, no analysis in the world is 100% right. No strategy in the world is 100% right. No strategy, no analysis in the world will be 100% right. Unless, of course, some people who claim to be 100% right get one trade in a year, 2 trades in a year, and they say you learn this and you learn that, and they get 3 or 2 trades in a year. And believe me, I feel that sitting in front of my computer for so many hours waiting for 3 trades in a year is too long time for me to sit in front of the computer and do work on trading. You will be wrong sometimes. It's okay. Any analysis in the world is about probability. It is never about certainty. From CID to fundamental analysis to technical analysis, everybody is about probability, not about certainty. That is a one important lesson which I got in my chartered market technician, which I did from MTM Market Technicians Association, which is in association with New York University. I have learned from Steve Nissen, Candlestick chart. I've learned from the best in the world, learned from the best authors and books in the world, and here I'm in front of you and telling you that each one of them in their first chapter they say one thing. It is not about certainty, it is always about probability. So you have to understand that. One of my friends is a very good fundamental analyst. About 2011 or 12, he told me about a stock which was trading at 100 rupees. And he said that the value should be, very high and, it's a very good buy looking at the balance sheet. I respected what he said, but I didn't go and buy the stock. I was tracking it. He said that to me in 2012 or 11 end, something like that. And then in 2016, I bought that stock for 120 and we both sold it at 180 rupees. Because I went long on the stock when it was going higher, when it was going up, and we sold it within 1.5 years or 1 year, 2 months from that, within that time. Are you getting what I'm trying to tell you? How many of you are with me right now? Raise your hands, please. Show me a raise of hands who are with me what I'm trying to tell you. Right? So that is what the difference between fundamental and technical analysis is. The technical analysis focuses on the point when the price movement is likely to happen. I may not be the leader. I may not buy it at the low. I may not buy it at the bottom. He has bought it at 100 rupees. I bought it at 120. I may not have bought it at a cheaper price, but I bought it when it was going higher. I'm the first follower. I'm not a reader, and there is a value in being the first follower and not the leader, because that is how we are able to identify clear trends. That is how we are able to identify clear trends. Because in fundamental analysis, there's a constant reality gap. What do I mean by reality gap? A reality gap means जो न्यूज में होता है कि चलो ये कंपनी का क्वार्टरली रिजल्ट बहुत अच्छा है, ऐसा ऐसा है, and the stock price is still tanking. There is a significant growth and growth prospects towards the company. Everything is right in that news for the stock price to go up, but still the stock price is going down. Now there can be any subjective justification for it. They will come and tell on the TV, oh, the price had the stock had already priced in a very good result and it is little lower than the estimates. Who estimates this? What is the estimate? Each and every group of fundamental analysts have a different average estimate, and sometimes when it beats the estimate, then also the price is tanking. What I'm trying to tell you is that fundamental analysis may be very good, but it is very good only for the long term. And I don't see much long term when I'm trading, because that is my bread and butter. That is the bigger bread and butter, and that is even the fortunes I get in between. For me, technical analysis is all that, not fundamental analysis. And for somebody, it may be some kind of a 10-year, 20-year period of wealth creation. That's fine. You do that. You do that for your savings. You do that for the future of your children. You can take 20% of your savings and invest for the long term and forget about it. You literally forget about it. If that becomes a 10 bagger, your overall savings will be giving a lot of security to your family in future. But when it comes to markets, trading day in and day out, you cannot discuss from a fundamental point of view. Get that very clear. Be clear about it. Clarity is the most important thing, right? Of course, sometimes there is a news and the stock price also goes up during that time. So the news can act as a catalyst in some of the short-term moves. But I can show you many examples, and if you go to my YouTube channel and see a lot of videos, you will see a lot of examples I have shown in some of the videos that the news is positive and that is the high for the year for that stock. The stock during that year has not made a higher high after a positive news, and vice versa, negative news and that's the low, few percent low, and then it started going up, and for the year that was the low. So there is a reality gap you have to acknowledge between fundamental analysis and technical analysis. Right? What you see on television is 90%. I know I would not be able to claim anything, but I don't want to comment on someone else. But yes, I do feel that it is compulsive analysis. Markets don't move in the same shape and size every day. Markets move in many different ways on many different days. Right? So if a person is coming at the same time and talking about analysis, obviously there's no trading idea generated at that very hour every day. No clear trade available that same time on every day. So that becomes a compulsive thing to be done only because at that time it needs to be telecasted, broadcasted. on the television. Number two, misconception number two, very important, very important. Most people don't get this. I can tell you these few things, and I teach this in way more details in my full 15 session course. If anybody chooses to join this, that would be one of the best decisions of your life you'll be making right now. One technical tool does not work in isolation. In isolation, just one technical tool has no meaning. It is a set of technical tools, a set of variables, a set of concepts applied very nicely over a period of time. That one trade offers me that this, and this put together is all I can see in this one chart. Therefore, out of my 5 factors, if 4 factors are pointing towards a move on the upside, then there is a high likeliness of a move on the upside. Number 4, biased analysis is not analysis. How many of you sometimes get biased when you are analyzing that because it's your favorite stock, etc., etc.? Raise your hands. How many of you get biased in your analysis? Because your friend said, or because it's such a big company, or because you never expected the markets to move like this, and because you were biased because you were so overconfident because you made money yesterday. Lot of hands are up. No biased analysis, please. Acha, this is not only about the bias of overconfidence or expecting too much out of a stock. Sometimes the bias is only because you've got a recent loss and you have emotional effect on your reading. You're reading the charts emotionally and not objectively. How do you expect to make money in the markets objectively if you cannot read the charts objectively? And why this happens is most people do not learn properly how to read the charts, how to read the price structure. I get a lot of people talking to me, sir, there's a breakout today. I say, कहाँ breakout है? कल के high के ऊपर का high breakout है. Every higher high is not a breakout. Otherwise, you will get lost in intraday somehow. Every higher high is not a breakout, right? Similarly, a lot of concept like there's also a lot of misconception around divergences in a strongly falling stock. If you're pointing out divergences, then always understand, or strongly rising stock, if you're pointing out divergences, you can easily understand that if you don't have other technical evidence, it will not matter. It will go and make a higher high or a lower low easily. So when are the points when something works is when it is an alignment or confluence with other technical factors. Last point, technical patterns are similar. They are not the same. Technical patterns are similar, they are not the same. See, history repeats because people keep doing the stupid things again and again and again. The market shows us the same things again and again and again. And because the patterns are consistent, you can make money on it consistently if you trade it. But technical patterns are not so easy to read. There are many factors involved. And those technical patterns, they may not be like a stencil shape of the textbook style. You will get clear patterns, you will get, but still it will not be like what you see on the textbook or similar to what you made money on yesterday. Technical patterns are similar, they are not the same. The difference between similar and same needs to be understood very, very clearly. History doesn't repeat, history rhymes. In markets, history doesn't repeat, it rhymes. I hope all of you are clearly understanding and along with me what I'm saying. We'll come to charts, yes, we'll come to charts, we'll come to setups, but I want you to get to know the basics first. Basics is that at any given point in time, the market will always move in extreme. The market will go up higher than it is supposed to, it will go down much more lower than it's supposed to. Even overall bigger time frames, an extension is up more than it is supposed to, and corrections are deeper than it is supposed to. And why this is happening is because people hold on to losing stocks, they hold on to losing trades, and they keep repeating a lot of stupid things. They become very, those who are trading, say for example, in the short time frame, and they're going to the extremes. They're creating those chart patterns and extensions in move in intraday or short term. Basically, what I'm trying to tell you is that people don't change, but you have to change. If you want to stop working for someone else and want to make money for yourself and your family and your friends, I want to throw the biggest parties, have the best weekends. If you look at my trading, I that 30 days in a month, 20 trading days, about 4 or 5 trading days. I usually don't trade because I've made enough money and I'm resting sometimes, or I'm going for a mid-weekend, a mid-weekday outing or something like that. Sometimes I travel. So about 15 days in a month I work. 4 to 5 hours of trading out of the 6 hours maximum. Sometimes I get my trading done in 20 minutes, and I live a completely chilled out life. Even the fact that I'm wearing a shirt in front of you today and sitting is only when I'm in formal meetings and occasions. Otherwise, I'm having a very clear, chilled out life. But people don't change. You have to change for this. For this, you will have to change. For financial freedom, you will have to change. But people are not willing to change, and that is why they hold stocks all the time. And you know, when they don't, when they change in the extremes. They change in the extremes. They change in these extremes. They change in these extremes. They change in these extremes. They'll go short over here in the middle of air, and they will change here. They will close their losses here. They change when there is no other option but to change. In my 9 years of experience in the markets and 4 years of experience of teaching, I've realized this. Most people come to me, come only after realizing their mistakes. And those who truly realize their mistakes are the ones who succeed in the markets because they are willing to change. Yes, they're willing to change. You see, I have more than 5,000 overall, put all social media together. I have more than 8 or 10,000 followers, all social media put together. And right now, I see 25 people over here. Why? Of course, I've had bigger webinars where more than, I think my webinars in the world with market webinars, generally the highest is 200 or 300. I have catered webinars with more than 150 people. So I've had very big webinars also. But right now, about 26 people of you are here. Okay. And there are about 8 to 10,000 followers overall in social media. Can you imagine why? Because everybody is looking for something quick fix, fast. Give me a trade, give me a trading idea for today. Let me make money today. But then, how is that going to help them to make money every day or make money overall? Overall, a period of time, make money consistently. Right? Okay, guys, markets don't move in squares and boxes. They move in waves and they move in trends. Please understand. Markets don't move in squares and boxes. Of course, you can make trend lines, and there are concepts which do propagate. And I also teach like that. That yes, there are concepts where there are very flat lines and clarity is there. But in most cases, markets move in crest and troughs, in waves, in a motion which is not like a box or a square all the time. If you're approaching technical analysis from only that perspective and patterns from only that perspective, then it's a problem, right? So how do you learn the technical concepts? You have to categorize them basically. You have to categorize them. You have to categorize each and every concept. I'm not talking these are the concepts. Please understand. You have to categorize the technical concept according to a time frame, a trend, a placement, and with other technical factors. So whenever I take, say for example, I take up a candlestick, I will see the time frame of the candlestick. I will see the trend of the market. I will see the placement of the candlestick. Then I'll take something else. I'll see all these three things out of that. And then I'll apply candlestick with that something else. And then another concept, something else put together, 4, 5 concepts. And then those trades will be super high probability trades. Sometimes people ask me, just about a month back, I had posted about a trade online on my free Telegram channel on the stock Gale. I gave a short call, and by the next morning, first 15 minutes or 20 minutes, 25 minutes, one lot profited about more than 1,25,000. One lot profited beyond 1,20,000-25,000 rupees. How did that trade come about? Most of you are following my Telegram channel. You must be knowing about this, or maybe those who are not, they can check it out. About 1 month back, this trade came because I looked at multiple technical factors together. And at some level, I have internalized my live market tracking. Whatever my alerts are, whatever my, what I have built through over the time, there's a way I track the markets. And if you will notice that day, that entire day I did not take a single trade. It is this trade which I took, and that too, just one and a half hours of the market. To last one and a half hours in the market. I took only that one trade, and that one trade can make so much money. It is important to trade effectively. It is not important to trade more. Please get that very clearly. It is important to trade effectively. I was clear about all my concepts, the time frame of all concept, trend, and placement of all concepts. I am giving a high probability signal. Some of the people have messaged me and congratulated me and thanked me for making money on that trade, which was given for free in my free channel. They've thanked me, and some of them who even got out intraday, they also made close to 35,000 rupees on a lot. Taking up a simple concept, it's a double bottom pattern on the chart. This is the textbook style. This is how it looks like on the textbook. But when it comes to the real market, it takes a different shape. It looks like this sometimes, where all these wicks are very disturbing, and when markets are in motion, it's very difficult for people to objectively categorize what is what. It sometimes seems like this. It sometimes seems like this. And all of them are correct patterns. All of them. Believe me. When I'm talking about trading, I always talk about a certain kind of mindset. And I'm known amongst my students, even before they join me, they see my YouTube, etc., and they understand that yes, psychology is important. Yes, being positive is important. Most people are locked up in these emotions of self-pity, worry, anger, dread, resentment, and fear. I have known people who are excellent analysts, excellent at trading, which they could have been. But at some level, they're keeping themselves back because of their own thoughts. You're feeling good or you're not feeling good. Either way, it is your thoughts that is ruling it. You can be sitting in a Bentley and maybe crying, and you can be having your own cycle and you may be laughing heartily. It does not matter what you have, it matters what you enjoy. It is matter how big and high you can think. How many of you really over here want to think big with the markets? Because I'm not going to waste my time with people who think small. Raise your hands. How many of you think big about the markets? How want to make it big in the markets? Big, really big. Humongous, large. You know what Dhirubhai Ambani used to say? He used to use these words: humongous, immense, big, large. Right. Only if you think big, you will walk towards it. It will come to you. You will attract it, because positivity will attract positivity no matter what. You have to think big. You have to be relaxed. You have to have a good life as you go ahead. You cannot be in tension all the time. At the same time, you have to think big. And those people who think big don't let these small emotions affect them. Their mind is stronger than these small emotions. Their mind is stronger than these small emotions. These small emotions are not what they are locked up in. And in the world of trading, these emotions are the most useless and counterproductive things you can ever have. Take this from me. The most useless and counterproductive things in the world of trading are emotions like these, which people tend to lock themselves up in. You don't have to lock yourself up in emotions like this. You don't have to be self-limiting. And that is why I'm talking about these things. Because these tend to create behavioral patterns. Your emotions tend to create behavioral patterns that repeat. And you know why this happens? Because historically, we were meant to survive. From the prehistoric times, man used to hunt. They used to be surviving at that time and trying to survive. They would, make themselves come down to a survival mindset. How much do I need for the month? How much do I need for the day? Right? Now, people who come to my course, who learn from me, they don't think in survival. They think in thriving. Yes, they think in probability, because that's what works in the markets. They think in probability. I teach them all these concepts and more. I teach them all these concepts. They think in probability and they don't think in survival. People who think in survival also come to me, but they don't join the course. They keep asking for discounts, and keep asking for discounts, and in the end, they don't feel up to it. I just charged 12,500 for a 2.5 months course. That's peanuts in front of, it's minuscule in front of what markets can make you. It's a full 15 session course. 15 session course covering a lot of concepts. I don't go to harmonics, neo waves, and yang. I'll just tell you that. It is just to tell you the broader categories over here. The broader categories of technical analysis starts with the basic classical things. The basic classical things, which ultimately on the mastery level lead up to patterns and proper interaction level. The first chapters are that. Then we go in excellent details in candlesticks, even advanced candlestick patterns, learned in a very essential way. Like, you understand the essence behind each and every pattern. You have to understand the essence intimately. You have to understand each and every concept intimately. That is what works. Because only if you understand things intimately, not only on the surface level, will you be able to work with it, analyze, and be clearly objective about it. You can't be lousy. People who lose money in the markets are basically lousy. They'll be lousy about their trading. They just squander their money here and there because some of their surplus money they feel they don't deserve. But people who do it properly, people who learn, do it very, very well. Indicators, some of them I teach. I talk about a lot of them. I talk about different categories of indicators. We teach a volatility indicator of certain category, a trend indicator, momentum indicator, etc. Volumes are spoken about. In options, we have 2 sessions on options, and there's a full detailed course contents which I'll send you online. You see, Elliott wave theory, a lot of people are approaching me all the time. What's the Elliott wave theory के बारे में कुछ बोलिए? See, it is not. It is on the textbook. It is talking about 5 waves up and 3 waves down in an overall uptrend. But how is it actually applied? Elliott wave theory can only be applied first. You learn the basics very properly. That is why in the end I have 2 sessions on Elliott, so that you can understand the basics of Elliott, and after the course also you can develop on it. Elliott wave theory is very, very good. Okay, it can set you in the best risk reward places at certain times in the market, right? Before we go to Elliott wave theory, we will have to go through the basics. But what I have set up in front of you are certain examples of Elliott wave theory, and then we'll move on to candlesticks, get some example of basic supports and resistances, etc. Elliott wave theory, for example. Just give me 1 second. Just 1 second, please. 1 second, please. Yes. So we're going to discuss some concepts and see how these things actually look in the market, right? I'm going to give a lot of examples. I'm going to go deeper into concepts, right? I hope all of you have the time to sit and listen to what I'm trying to say. Raise your hands, those who have the time. Those who are really realizing what I'm trying to say, understanding what I'm trying to say, raise your hands, please. Who all are with me and who are having paying attention here and there. I know who all are paying attention here and there. I can see it from here. Believe me. Okay. So those who are raising hands, thank you. You are very active. Keep interacting and feel free to ask questions anytime. When it comes to Elliott wave theory, we said okay, 3 waves up. Sorry, 5 waves up. 1, 2, 3, 4, 5, and 3 waves down. Right? In the real market, it looks something of like this. Now, to the naked eye, to see it as 5 waves up and 3 waves down is very difficult, because each wave need to be mastered. There are many Elliott wave patterns also, which not many people know about. They think it's only waves up and down. No, Elliott wave patterns of our corrections are different. And why this becomes a 3 wave corrective pattern, where there is a correction of a correction, etc., are very complicated concepts which you need to learn step by step. First comes the wave structure. Don't use Fibonacci just like that. Get the wave structure correct, because your high to low needs to be, or low to low needs to be a full 1 wave cycle, and that 1 wave cycle will have an extension also. Here wave 1 is extended, 2 and 3 is also there. So you have to understand. Now, which analyst in the world who is a fundamental analyst or mutual fund manager, whatever in the world, can tell that at this point, exactly at this point, the market will turn around? Here is the move which came before Modi ji became the prime minister and after. Technical analysis, it told me Modi ji becomes the prime minister or not, market is going up. This is one concept. Of course, I had other things to concept to align with it, but I have mastered it over a period of time, over years. Okay. Now we spoke about a 3 wave correction, for example. Let's take for example this chart. One of my very big trades in 2017 was a short trade on Lupin. Now I'm putting the chart on weekly basis for your ease, but this is the areas where even on social media I spoke about shorting Lupin for a very long time. Now I said 5 waves up, 3 waves down in an overall uptrend. But in an overall downtrend, how many of you can see 3 waves pullback correction? Raise your hands. Those who can see, raise your hands. Those who can see and identify, raise your hands. A 3 wave pullback, how many of you can see? You know, if you learn from me, it will not take a lot of time for you to understand this. Thank you for those who are interacting. Many hands are up. It will not take a lot of time for you to understand these things and how you can use in conjunction confluence with other technical patterns. There are of course much more details which I can't include right now because it's a one webinar, and there are other ways to confirm these, etc. But if I've got the broader weekly chart pullback, it's very highly likely that if this is a pullback, then the overall trend on the downside will continue, and you can see how big it continues later. right? There's more than a 50% fall in the stock price, right? Okay, Padamji is asking, can you explain the wave here, please? Okay, I will say that if there is a 5-wave up and a 3-wave down on an uptrend, on the downtrend there's a 5-wave down and a 3-wave up, and then the downtrend continues. So basically in the downtrend there will be a 3-wave pullback on the upside. This is what the 3-wave up is, which we will label as A, B and C. I hope I'm clear now, right? And I'm not saying that you find this every day on a weekly chart, okay? Don't mistake in that. But I'm telling you, concepts, this is just less than 1% of totally what people learn. This is the weekly chart, Mr. Prasad. This is the weekly chart. Just for the ease, I made the weekly chart. I could have made the daily chart, but just so the clarity is there, this is the daily chart. This is the daily chart. There's a huge ABC pullback, so you can imagine how the downtrend is continuing later, right? Okay, I'll give you more examples. Fine. I am always open to students asking questions. I'll give you one more example. So, take for example, where I'm looking at the chart of DLF. Okay, I'm looking at a chart of DLF, and this is again going to show you how important it is to know the nitty-gritty of the concepts. Now, generally, of course, each and every student of mine was able to decipher the trade. I remember my students, we talked about the trade as it was giving us the entry. At this point, there was a huge trend line breakout and an inverse head and shoulder breakout. I know it's a very complicated pattern, not the textbook style, but I'll teach you, those who are coming joining me. Okay, now if I remove this trend line over here, can I explain something through Elliott wave theory? Yes. I said in an overall uptrend, there needs to be a 3-wave correction according to Elliott wave theory. This is the 3-wave correction. Sir, then what is this? Ye kya hai, sir? Is it making a lower low? Is this making a lower low? No. These are the subwaves. These are the subwaves. 1, 2 subwaves. I hope you all are getting my point. Raise your hands who all are getting my point, what I'm trying to say. Thank you. And it is very easy to get to these, provided you are ready to work, right? It will not take a lot of time, but you will have to invest some time for your growth and learning. Some time for your growth and learning, right? Now I'll tell you how candlestick patterns are. Candlestick patterns, let's take up the anatomy of a candle because most people don't know that also. Mr. Ravinder is saying that he can't hear me. Is everybody else able to hear me? I think there's some internet problem from your side, Mr. Ravinder. Is it? Okay, thank you. The rest can hear me. I think Mr. Ravinder has some internet problem. No problem, it will get fixed. The anatomy of a candle. A candle looks like, for most people, candles are basically green and red lights. It doesn't make much sense to them. It's just like green and red lines which are dancing. But what a candle is for? Why do I not use the line chart? Why do I use a candlestick chart? Do you know that? You have to know these kind of things. Why you use not a line chart, but a candlestick chart is because the candlestick is talking about the emotional nature of the market, the sentimental nature of the market. You see, when I draw a red candle and say this is the open, you imagine this to be a daily candle, okay? And this is how I teach in each and every candle. Imagine this to be a daily candle. I start from a very core point of view so that you understand the probability natures. You see, this is the open. The price in the daily chart is open here. During the day, it has gone to a certain high. And overall during the day, it has gone and made a very deep low. It has given us pullback and then it has closed. This, if I cut open this red candle, this is how it will look. Now, what there can be other ways it can look, and depending on what candlestick patterns are there, double candlestick pattern, triple candlestick pattern. This is what they're trying to show. And all candlestick patterns, there is a way to merge the candlestick patterns and understand. Like for example, a piercing pattern is actually a hammer. A dark cloud cover is actually a shooting star. I know those people who don't know these things, right? Yes, Mr. Ravindra, I'll get back to it later. And why don't you otherwise watch the recording? Okay, you watch the recording. I'll get back to you later. Okay, if we have time, because other things I've passed on that part. Okay, I'll explain that. I know your internet problem, so you couldn't hear properly. I'll get back to you. No problem. And then if you want to ask me something personally, also you can send me a message or call. Yeah. So the piercing pattern is actually a hammer pattern. But how a double candlestick pattern becomes a single candlestick pattern? You have to know all these things, and to know what these things mean, you must learn properly. Like for example, the hammer pattern. When I talk about a hammer pattern, you all can see the hammer pattern. You will see which looks like a hammer, a long wick. And what happens when there are two hammers? What is having the effect of two hammers? Let's look at this talk called VEDL. 2017, before I had my workshop in Bombay, a few days back, I posted on social media about VEDL. VEDL had two hammers together. Two hammers together. Now please don't try this just without seeing what I'm showing in one example. There are other sides to things, and I'm going to try and explain as much as possible from a basic point of view. But once you come to the course, I'll explain you in detail so you can apply it properly. But I posted this on social media and I showed that this is two hammers. And I would also explain that this blue circle is actually a B, C. A, B, C correction getting over, followed by two hammers back to back, above a basic resistance line, breaking the resistance. Why is this resistance? Because everybody who's selling here, selling here, selling here, all the sellers are taken out. Three things are coming together. The ABC, two hammers, resistance breakout. And can you imagine how big this move is? Raise your hand if you're understanding what I'm saying clearly. If you understand, this is how a technical setup looks like. I have not even made my momentum, Bollinger and other indicators here. I have not even made that. But this is how it looks like. And you see the extent of this move. Some people come to me, they say, I want positional trades. I like positional trades. I tell them one thing, please, if you like it, go ahead, do it. But understand that these kind of positional trades, if you're wanting 10-20% on a stock, will happen occasionally. So you have to wait for the setup to form. But once the setup forms, it gives you 2 to 3 days to go long on it. And you see the bigness of this move. It's huge. Similarly, you keep getting these things in the market. And yes, you will have stop losses in place. You will have to manage risk properly. But there is no money without risk. There is no money without risk. How many of you think you can make money without taking risk in the markets? Raise your hand. How many of you think you can make money without risk? Okay, good. No hands up. How many of you feel that when you take a risk, and when I say risk, I don't mean you have to take a very big risk. When you take a risk without any inhibition, without any embarrassment, without any guilt, and without any fear, and you have made money in the markets when you have done that, raise your hands. How can you take a risk without any fear when you know things objectively? Only then you can take risk without any fear. When you know things objectively. And it's all a very creative thing. What is the best part I like about it? Why I am the most passionate thing about it? Because it's a very creative thing. Right? It's a very creative thing. And because it's a very creative thing, it does include, and you can check out my blogs and my Telegram and etc. Whenever I posted something, right? It's a very creative thing. It is there in the universe in all designs. It is present in the universe in all different designs. It's a very creative thing. It is the same proportions and shapes and dimensions you see in nature. You can see the spirals over here in the flower, and the same proportion have the spiral in the Milky Way galaxy and the shell. Trading is against human nature, and that is why you will have to work. It is not something which you will do naturally. You will have to work. You will have to work upon it. But I'm here to tell you this. In the words of Napoleon Hill, that most people who are great, they have attained their greatness and success just one step beyond the greatest failure. So if you have any resentment and failure and resentment of failure, understand that success is just next step away. Understand that. And if you are interested deeply in improving, you can contact us. You can contact my friend Mr. Chavan and this number. And as I'm speaking, those who are sending and saving this number and making a WhatsApp, you want to join the course, it's a 2.5 month course because it's 15 sessions. Saturday, Sunday we will go. We are starting a batch coming Saturday. Coming next Saturday, we are starting the batch. Recordings will be available to students till the coming Friday of every batch. For every batch, recordings will be available to students till the coming Friday. Those who are genuinely interested in their learning, those who are, I'll be keeping the forum open for questions after this. I'll answer all your questions. But take last word from my side. Those who are genuinely interested to learn, to grow, must join this batch of Technically Sorted, which is starting in the coming Saturday. The fees is 12,500 rupees. That's it. No hidden costs. Only 12,500 rupees. And students, as back as when I started teaching, are still in touch, all put together in WhatsApp groups, and they keep discussing the markets as per their ideas. Fresh, eager minds is what I want. People who are really thinking big in the markets, I want those people to join me. Don't waste your time and my time if you're not thinking to make big in the markets. If you're here and in the markets and you want to take from the world what you feel you deserve for yourself, go ahead and claim it. Go ahead and claim it. Claim a life of freedom. Claim a life of prosperity, abundance, and most importantly, claim a life for yourself. For yourself. You should be happy doing what work you're doing. You should be satisfied doing what your work you're doing. You should have a smile on your face from Monday to Friday. Why only on weekends? This is how I live my life. You can live your life like that. 15 session course, Saturday, Sunday, 2 hours each. Full details from a very basic level. If you don't know anything about technical analysis, no problem. People who are undergraduates, people who are doctors, engineers, many walks of life and many professions, people have joined this course and benefited. Some of those students are here too. Will any of the students, how many of my students are here? Just show me. Raise your hands, please. Okay. 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 Yeah. After this, I will show some technical setups and examples. So some of these people are here, right? Great, great. So all of those people who are here, one of them is here who was my student from 2015. I only know how much he has developed over time. In the beginning when he came, I find it very difficult to even trade in futures. Then there is a student who joined me recently in the last workshop I did in Calcutta. And he has benefited from there. He has done very, very well. Okay, now I will pose the forum open for questions. I'll answer questions. Yes, the recording will be available, Mr. Anu. The recording will be available, right? Okay, so let's take up the questions and discuss some setups. Okay, Mr. Ravindra had earlier asked about the subwaves, which I had shown while he had some technical issue. I would request you to just go back and to the recording and see it. And if you have any questions regarding it, please ask me personally, no problem. Somebody is asking, risk and reward are integral part of trading. Yes, important. Risk reward are integral part of trading. Now you have to understand that there is a trade-off between risk reward and probability. If I have a very good risk reward, the probability of the trade can be relatively low, but you will get such trades over a period of time. So if I say I have a risk of rupees 100 and a reward of rupees 700, 1:7, those trades I will not get day in and day out. Okay, because those setups take time to form. And also, if I get those setups regularly, if I try to trade those setup aggressively, I may be wrong 3 or 4 times and maybe right 2 times. So there is a trade-off between risk reward and probability. Where I like to place myself, I like to take my trades in two different sets. So a certain set of my trades are basically risk reward of 1:2, 1:1.5, which is not a very big reward against the risk, but the probability is very high. So out of the 10 trades, most of the trades, or say 9 out of the 10 trades, can be right. Okay, and then there is a set of trades as per the market giving its, giving its room, as we let the markets give some setup, right? Those trades actually work and they come less frequently, but they're working out to give 1:10, 1:8 risk rewards. Yes, it's an online course. It's a full webinar based course, Mr. Onkar. What is the success rate of 5 waves theory? See, Elliott wave theory is difficult. You have to first get the classical technical analysis clear. So when I teach the Elliott wave theory, it is also a concept which is supposed to be put in line with other concepts. You can't use it in isolation, because there will be, if somebody going and coming and telling you that, Elliott wave theory is the best, I'll teach only Elliott, you learn from me. No, sorry. If somebody comes and says, I know GAN is invincible, nothing like that. No particular concept is in isolation is invincible. You have to be practical. You have to see all the concepts and whatever concepts are applied for that particular setup. So there is no success rate for 5 waves theory. The rate of success is very high when a confluence of concepts is there. And yes, with Elliott wave theory, it takes time to have those formations, but as and when the market gives you those formations, you do get your trades, and those trades can go for very low risk and high reward sometimes. So you'll have to give time to understand the basic, then master Elliott over time, right? Mr. Ajay is saying, I have zero knowledge. Will I be a successful trader? Yes, of course. If you have zero knowledge but you are ready to gain knowledge, you will be a successful trader. Mr. Ajay, you must understand, it is important to have the sheer desire, and you must be willing to do anything. If you are willing to do anything, success will be yours. Mr. Santosh is asking, I'm a salaried employee. Can I do trading as a part-time? How? So, Mr. Santosh, you're a salaried employee. Say for example, and I've had so many students who are salaried employees and can give only a few hours to the markets. So what I tell them, and it's worked for them pretty well and successfully, they condition themselves to take more positional trades so that they can lightly track the markets. And on the other hand, maybe 2 hours of the market you can clearly give. For some people who have office starting at say 11:30, they can give 2 hours to the market, for example. So those 2 hours, if you see intraday trade setups, you can take those things. Of course, there is a lot out there, right? And for that, you will have to do your homework after the market hours. See, most of my work is not during the market hours. Market hours are just a scoreboard for me. Most of my work is when I do the homework. Mr. Piyush is asking, okay, one more question before that. Actually, few more questions, but I'll take up one by one. Does your course cover the basics of commodity trading also? Mr. Onkar, I personally trade all asset classes. We discuss equity publicly in the Telegram channel, that's a different matter. I personally trade all asset classes, and technical analysis applicable in all asset classes. Yes, the nature of movement in terms of, say for example, currency, the nature of movement is slightly different from equity, but the principles of technical analysis equally work. If you're willing to work, they will work. You do your homework properly, etc. I mean, some of my students are commodity traders. They trade MCX. Some are NCDX traders also, right? Okay, Mr. Piyush is asking, what is the role of softwares in technical analysis? Okay, software in technical analysis, I have a elaborate charting software since I'm a professional, right? I have the elaborate charting software. Here I have the facility to create alerts according to indicators that I punch in. Okay, I can put up conditions and I can make alerts, etc. And the clarity is very good. If I simply, if I simply press groups and I go to a group of um, stocks, say for example I take all FNO scripts, I can easily, just by one click, I can just track different stocks. So yes, and in the live markets it gives me excellent charts. So during the live markets also I'm very active with the chart if I have got good setups coming in. So with the professional software, yes, it helps. What I give to my students is that when they come to the course, I give them a free trial. And I'm not saying you should go for a software. It is better you do so if you're professionally into it, but you can use any platform of charts which is available for free also. uh, a free trial of 20 days I get you done for this software which I use. That is one thing I do from my side for students. And do tell them that it's not necessary to get that software, but if you take the free trial, what happens is that it gives you an enhancement along with your learning. So it gives you that enhancement with a professional hands-on use, right? Piyush is asking if it means that if we have a good setup, we have an edge. Yes, an edge is very important in the markets. All technical setups are basically your edge. An edge is something in the market which is telling me a probability of something happening over something else happening. So probability of market going higher over the market not going so high or going lower. So I need to have that and see it as an edge. Only if you have an edge, because what do you mean by cutting edge competition? Lots of people are there. Okay, they're smart people. Nobody is dumb. I see so many smart people out there trying to do wonders with the market, and they do also, right? So if you have the edge, if you have honed that edge, if you practice from that edge, and if you have mastered that edge, you definitely have an edge to surpass normal typical losing traders category and cross the threshold barrier of profits and become a consistent trader. Yes, MT4 can be used as well. Anything can be used as long as your eyeballs are comfortable to it. You can use any platform. It's completely fine. The concepts will remain the same. The price data will remain the same. Okay, somebody is asking, I have zero knowledge. I want to learn technical analysis. You should quickly join me. Quickly contact this number, because if you have zero knowledge, that means you have zero clutter and you are ready to learn. And we start from the basics. So you should quickly join us. Quickly. 2 hours on Saturday, 2 hours on Sunday. Sometimes it is 1 hour 45 minutes, sometimes it is 2.5 hours, because the concepts are such. We take chapter by chapter according to going from basics to little advanced to more advanced. And in case you miss a session on Saturday, Sunday, till Friday, the recording will be available to you all. As many times as students want to make notes, revise, learn, ask me questions on the WhatsApp group, feel welcome. But this course, what it does in 2.5 months, we go through different market phases. I'll give you an example. So what happens when I talk about different market phases? Let's say, for example, different market phases. Let's say, okay, the different market phases. So the batch which just got over around a week back, that batch had seen market phases which were coming from here till about here. They got a good group of market phases. I think I don't exactly remember. 1 second. I remember when the batch started. Let me check the date. Yes, yes. So the August batch actually. Before that, the batch which started in June. This batch started in August end. So they saw these market phase. Now, of course, they saw one market phase, but tracking it with me, was an advantage because they can see what are the pieces of puzzle coming together. Before that, this market, this sort of phase, where I told the students that you are lucky to see this kind of phase where you see a very broad consolidation and after that a very broad trend. I'm not talking about just Nifty. There's Bank Nifty. There's a whole host of stocks and there's a whole host of patterns. And every time some of the other phase is going on, right? Okay, Mr. Dhingra is asking, so is it making a wave 3 pullback? I don't understand what you are saying by wave 3 pullback. I'm sorry. First, you understand the wave structure. I'm not understanding what a wave 3 pullback is. I'm sorry. Maybe you're talking about a correction before a wave 3 or after a wave 3 or something like that. Okay, the 3 wave pullback. Okay, okay, okay. Okay. You're talking about Lupin? Yeah, that was a 3 wave pullback, which I showed. This is a 3 wave pullback, right? No, Nifty made a higher high. Nifty made a higher high. We ended a wave sub wave 5, and that is why we fell so drastically. And it is a higher high. It is not a pullback. It is a completely higher high. Okay, it's a complete higher high. It's not a pullback. But thanks for asking questions. You are free to ask questions. Simple concepts work. I give you example. Like we spoke about the hammer pattern, right? Like we spoke about elite wave theory. Like we spoke about simple resistance breakout. Say for example, I put the weekly chart. I can clearly see that the market on the weekly chart has been testing this place once, twice. On the daily chart, so something which is happening on the weekly chart is obviously more significant in terms of the magnitude of move. And therefore on the daily chart also, it's tested it once, twice, and it's built a base. Now after that, it is again, so it's a similar concept, similar but not the same, and very easy to understand these things if you're willing to give in the time. See, it might look very easy because I'm showing it. I've been practicing this for years, but if you're willing to give it the time, it will become easy for you also, right? Any other questions? Most welcome to ask. Okay, very good question. Mr. Sandesh is asking, is price action different from technical analysis? Listen to me loud and clearly, everybody. There is nothing called price action trading. Please, it is just made a word to give people the impulses that, okay, you will get some action in the markets. No, I have learned from the best authors in the world. Price action, technical analysis is talking about price mechanism and price action. That is what technical analysis is about. Price, because price is a fact. Price is the reality. Price is your end-to-end. We are all talking about price. So there is nothing called price action analysis. I have personally, a lot of people came to me, asked me, sir, ये सब वो. No. Then I realized, मेरे को बताइए दो चार चीजें जो जैसे आपने सीखा है या कोई बोला है, कोई वीडियो है, मुझे बताइए क्या है, what is this price action, how is it different? I see the same things only, and then I see the same, just spoken in a slightly different manner. But just trying to put down something and take up something else, that's not the way. The whole larger universal set is technical analysis. It will give you all the setups. And I don't know what price action is. I'm sorry. I think the answer is you got the message basically. The price action is just a made up word. There's nothing like price action trading, right? So guys, thank you for being here, joining me. For those who are asking questions, thank you. Keep asking questions. I'm here to answer. All I can say is, in the end, if you want to live a life with ease and chilled out mode, and you want to take trade smoothly, have a consistent trading career, and make it big in the markets, you must take your steps. Take steps to learn. Take steps to grow. Take steps to do whatever is required for you to reach there where you want to reach. And thank you again, Mr. Piyush. Thank you, Mr. Onkar, everybody. Take down that number. contact us. 12,500 is the fees, which is actually not a very big deal in the markets. More than the fees, what is important is your dedication. I want you to be sincere for your growth, right? Have a great weekend, guys. Thank you so much. If there are any questions, you can ask. Thank you. Thank you, everybody. Okay. Thank you so much. Have a great weekend. I'll see you. And those who are joining me, great. I'll see you next Saturday as the classes start. And those who are not joining, I still hope to come across you very soon. Thank you. Bye bye. Enjoy. Have fun. Good night. Thank you. Thank you. Thank you very much.